Hello, everybody, and welcome back to another episode of Every Day is Saturday. My name is Brad Gatto. I normally don't do the introduction. My co-host, Matt Stahl, normally does this introduction, but he's not here with me today. The good news is I do have a co-host, and they're much better looking than Matt. So, Carly, welcome to Every Day is Saturday. Thanks for being here.
Thanks for having me.
That said, normally when Matt and I do these, Carly, because I know I gave you a ton of instruction, which means zero. I gave you zero. Yeah. You are not a financial advisor at Fiat Wealth Management. By day, your cape, your superhero power is what? Carly, what do you do for a living?
I am a CPA and I own WE Team CPAs, which is a CPA firm here in Minnesota that helps small businesses and individuals with tax preparation mostly.
Awesome. So normally before Matt and I jump into the super serious content that is Every Day is Saturday, we kind of just touch base about what's going on in our life and kind of how things are going. So Carly, what's new? What's new in your world? What's keeping you busy right now?
Well, it's March 3rd.
I was going to say, I can't believe I got you to do this in the middle of tax season, by the way.
Yeah, it's March 3rd. So I am definitely in the thick of late nights looking at and preparing tax returns. But I've also got 3 kids. So life's been crazy and busy. And I don't know if I told you this, but our 15-year-old flushed paper towels down our toilet.
Oh boy.
And backed up the sewer into our basement. So that's been new in our life and lots of work at home.
Why?
Yeah.
Why?
He decided to clean the bathroom with paper towels.
And didn't want to throw them away. He thought the toilet was a better option.
He thought it was the same thing as toilet paper.
Oh boy. Mm-hmm. Okay.
It's a really good lesson to learn. And we hope that he really has learned it, both for our house and for whatever future house he happens to own.
Okay. So you 3 kids. We know one of them's 15 now. How old are the other 2?
We've got a 5-year-old and a 2-year-old.
So you own your own CPA firm and you have a 15-year-old, a 5-year-old, and a 2-year-old.
I like to be busy. I don't sleep a whole lot.
Especially not this time of year.
No.
Well, with all that being said, you took time out of your day to drive here. You don't live right next to our office to record a podcast with us. So number one, just thank you for being here. Obviously, we're going to talk about taxes today. That's why you're here.
Yeah.
Right? I can't believe we did that. Like, I'm so stuck on that. We live in, we live outside of town. And so we have a well and we have a septic system.
Yes.
And this is my first, I'm 40 and we moved in there a couple of years ago. So I was, called 37, 38 years old. We moved in this house. I've never lived in a house that has a septic system. I've always lived in this, some sort of town that I lived on town water and town sewer. And they did an okay job of trying to educate us on what this all entailed. I didn't listen. And 2+ years go by and we've never touched the septic system. And all of a sudden there's water in our basement and and it's not awesome water.
Mm-hmm. That's what I'm living through it.
Oh
yeah. It's not, water damage is a whole different thing.
Especially when it's not clean water.
Yes. When it's not clean water.
Yeah. So the company we called to come out and remedy the situation basically looked at us like you are not intelligent. Like the fact that you've lived here this long and you've done nothing to your septic system is not good. So needless to say, like your 15-year-old, I will not be making that mistake again.
Yeah.
Hopefully. So, well, thanks for being here. The point of this episode, Carly, is just to kind of talk about taxes in general, not necessarily, like some sort of like PhD level tax of what's going on. But it's interesting because we at Fiat, with the families we serve, it's impossible to separate out investments and taxes because for every investment decision you make, there is a tax decision. Mm-hmm. And so people always think about what we do at our core. Like if they know nothing about us, they would assume that we manage money or we manage portfolios. And we do a lot more than that, but that's kind of the baseline assumption. And then inside of that, they forget about all the other planning that we do for the families, whether it's cash flows type stuff, estate type stuff, but there's always this overlay of taxes. And there's just a lot of misnomers when it comes to just the baseline understanding of not only what we do, but frankly, what you do.
Yes. I mean, I think that's a big piece of why I love working with Fiat, first of all, is that you are really talking to your clients about taxes and that there isn't a separation between what's going on the investment side and the taxes, that all needs to be happening together. And I love that we get to kind of play off of one another and what we're doing and work together to do that. But
I didn't pay her to say that, by the way.
Yeah. Well, I mean it. So it isn't necessarily common with some of the other financial advisors I work with, where they're really proactive in talking to me and thinking about some of the tax implications of what they're doing on their side and vice versa.
Yeah.
Like what our tax decisions might do for them.
Well, I want to start like at a point where like way before people think we might start when we talk about taxes. And that is understanding the system that we live inside of. And we were joking about this a little bit as before we started the podcast of the fact that we live in this quote unquote voluntary tax system, which by definition doesn't mean you get to opt out of paying taxes. It means that the onus is on the average American to tell the federal government how much they owe them. So let's start there. Let's talk about that.
Yeah, our voluntary tax system is really interesting in that you're right. We have the responsibility to tell the government how much we owe, and then the government's going to kind of fact check you and make sure that you're right. And that's why we get things like W-2s and 1099s at the end of the year, because the government was worried that the individuals wouldn't be honest in truly reporting the income that they made in the year. And so they started asking businesses to report that to the IRS on those individuals' behalf so that they have a basis for kind of cross-referencing the income you put on your return with what was reported on those 1099s and W-2s.
I did not know that. So it started out. So we've been taxed directly through ordinary income taxes for 1913 was the first year. So now we're 110 years into that. Mm-hmm. So it didn't used to be that 1099s and W-2s were a thing. You just wrote down whatever you reported, and then the government kind of got wise to it. And they're like, well, wait a minute, there needs to be some sort of check and balance here. And so that's where that came from?
Yes.
Wow. I mean, I don't want to put you on the spot here, but I'm going to. Do you have any idea when that started or roughly like when that came into play?
I don't know what year, but I mean, even similarly, the idea about individuals reporting their own income and then having to pay the tax on that income, the government started to get worried about people not being able to pay the tax at the end of the year. And that's why they actually started mandating employers to withhold the tax. So that also hasn't been in existence since the tax code started. So when you get your W-2 and your employer withholds tax, that did not always happen. So
I didn't know that either.
Yes, it was just a collection effort that they couldn't.
Now I realize I'm a hyper nerd about this stuff. Yes. So this is super interesting to me. And so maybe it's not to the listeners, but you're blowing my mind. So from 1913, when they started taxing you and I directly after the passing of the 16th Amendment that allowed them to do this, that I do know. I did not know that it hasn't always been the case that businesses had to report what they paid you and that you were required throughout the year to have mandatory withholdings if you were W-2'd and not just allowed to pay your bill at the end of the year.
Right.
And that was all based on one, I don't trust you to report correctly. And number two, I don't trust that you're going to save enough money throughout the year to be able to pay me. So I'm going to mandate that the businesses tell on you and that you pay me as you go.
Right. So it's interesting because I didn't know that. They've made the businesses like their collection agents. Right? Like if you
it's so true.
Yes.
They're, oh my gosh. Yeah, they're collection agencies. They're, what are those guys called that if you're supposed to go to jail and you don't? What are those? Bail bondsmen.
Yeah.
They're the bail bondsmen.
Yes, they are.
I've never thought about it that way.
Yeah. And that's why, like, if you think about all of the latest news that's come out about like Venmo and PayPal trying to track and starting to report income to individuals on 1099s, it's all of this that as our world keeps evolving, the IRS has to keep building more rules around that to say, oh, well, that has to go on a 1099 to that individual too. And they're trying to capture all of these sources of income that are happening all over the place. I just talked to a client that sold some personal stuff on eBay, and eBay told them that they exceeded the threshold. They're going to get a 1099. They're like, well, if they had a garage sale at their house and sold some of their personal stuff, they wouldn't pick that up as income. But eBay doesn't have a way to differentiate the people that are on there selling for business versus the people that just like sold some stuff out of their shed.
Let alone the fact that whatever you're selling, you're probably getting less than you paid for it. So from the perspective of you didn't make any money.
Yes. So we had that conversation where I was like, there's no tax impact. We'll put it on your tax return so it matches what the IRS has and we'll take it back. But it's so silly.
I just genuinely appreciate the thought process of why businesses issue 1099s and W-2s and the fact that the government is just, and rightfully so, right? Because you get a lot of businesses, whether it's somebody that cuts your hair, like service-based businesses, where it's like there's a regular price and then there's a cash price.
Yes.
Right?
Absolutely.
Because there's nobody to tell on you. And so you have to self-report. And I mean, I've served tables in my day. I don't know if you ever worked at a restaurant and served tables. Ever had the luxury of doing that?
I actually just had someone ask the question, like, what's the job that you wish you never hope to have? And that was it. I'm like,
really?
Please don't put me in the restaurant industry. I don't think I could do it.
Yeah. It's not ideal, right? Because the problem is always your problem, even if it's the cook's problem or somebody else's problem. Yes. But I will tell you what I always tell people. I've served tables at plenty of places, and that's a good job. It's not a great job. It's a good job. A great job is where you get a tip and don't have to deal with people. That job is pizza delivery, which I have done. It doesn't sound like the most glamorous job in the world, but and this was at a time where, smartphones weren't a thing. And I was driving around in my car listening to CDs, and I got to deliver the pizza, drop it off, leave. So before they ever knew anything was wrong, if there was anything wrong with the pizza, I wasn't there. And so they were calling back to the store and I didn't have to deal with these people, and I already got tipped. It was a great job. And gas also didn't cost $3.50 a gallon back when I was doing this. So if you want a tip-based job, stop going to the restaurant and go to a pizza delivery place. That's what I'm trying to say.
So years ago when I was in college, I had a teacher. I was talking to a teacher and her husband, and he was recommending that I go get a pizza delivery job for that very reason. And she looked at him and said, "Are you really telling a young girl that she should go get a job where she shows up at like frat boys' houses at night?" She was like, "Don't do it." So caveat to the
well, fair. That's fair.
Safety.
I have a lot of blind spots, Carly, in that I never thought about.
You don't have to worry about that.
I had the blind spot too of not understanding why 1099s and W-2s are required. So now that we know why, it's March as we record this. It's March 3rd right now as we're recording this podcast. It's who knows when it's going to come out, but it's March 3rd. It's tax season. One of the things I want to discuss next is this idea that when people come to you or your peers, whether it's the easy button of, and I'm going to step lightly here, like the H&R Blocks of the world or something like that, or it's a individualized CPA like yourself or a bigger firm, and they hand you all of their documents. I just think there's this big misunderstanding of what is going on behind the scenes. They hand you all this stuff. What are you, whether it's you or H&R Block or whatever? And I'm not saying that, we refer a lot of business to you, Carly, because I know you're a rock star at what you do. So let's just get that out. Okay. I'm not referring any business to H&R Block, but like at the end of the day, what is happening?
Yeah. And I'm going to sound like I'm discounting my own services here, but tax preparation, the actual compliance work that you need done in the middle of tax season is really just taking the numbers on all of those forms, those W-2s and those 1099s, maybe 1098s, and putting them in the proper place on the tax return. Mm-hmm. So there's really little that can be done in the middle of tax season that actually affects what those numbers are. We talked about this a little bit, that, maybe clients that say like, "Oh man, I've got such a great CPA. Like they saved me so much money. I got this giant refund." Yeah. And I hate that. I hate that because on the other side, if you owe a bunch of money, I don't think that means I'm a terrible CPA. Right. And I think the way that we think about whether we owe or not is so interesting because we are paying the government all across the year. And if you get a refund, that just means you paid them too much. Mm-hmm. It doesn't mean that your CPA came up with some magic way to get those numbers down. Yeah. There are a few things we can do after the end of the year that affect the prior year. Like you can put money into an HSA, you can put money into an IRA. Those have deadlines that follow the tax return deadline. So instead of being calendar year things. But most things, if you're not talking to your CPA or your tax preparer as the year goes on, once it kind of gets into tax season, you're a little too late to make those changes. So, I say that, and then at the same time, I'll contradict myself and say there are times when I talk to clients, and absolutely having a CPA who knows the tax code can really help you. Maybe take advantage of things that you were already doing that you didn't know had either tax credits or tax deductions kind of related to them. Like, had a new client and they were talking to me about their kids who are older, they're in college, and at one point I was like, "Hey, do you have the tuition statements from your daughter's school so we can claim the tuition credits?" And they said, "Oh, we don't get those because we're paying for all of their school with loans." And so then we had to explain how you still are taking on that debt. You are paying for the school. And later when you pay off the loans, you don't get the tuition credit anymore. So they had just fully disregarded this credit that was available to them.
Sure.
Right. So there are some things like that where I think if you have a really good CPA that knows you, knows your life and your family and what's happening to you in your world, they can help you kind of identify and make sure that you're maximizing all of those things. But most of the time, I'm taking, numbers off of your W-2 and putting that onto the tax return. That's
a really good point. And I don't want to discount what you do either, because I, like, with a bullet would tell people you shouldn't be doing this on your own. And it's not because I don't think that people can transfer numbers from a W-2 or a 1099 into TurboTax, because I think they've foolproofed that system pretty well. That said, where people tend to go sideways is they don't know what they don't know. And so I've even seen situations, Carly, where people get documents, but those documents never make it to the return. And it could be both ways, where they're missing out on a credit or they're missing out on a deduction because they just don't claim it because it never actually makes it to the return. It's not that they entered anything wrong. It's that they just didn't enter anything. And so bank, I was going to say bank error in their favor, but it would be the opposite. They overpay because they didn't put something in. And that could be true of TurboTax, but that could also be true of the H&R Block type scenario. And I don't want to pick on them. It's just that tax service where you can just walk in same day, hand them your documents. They take that data, they input that data. What they don't know is what they don't know, which could be that you've got that situation where you've got access to tuition credits because they don't know that you've got kids in school or something. And so they don't even know that they're missing that documentation to be able to file that. The opposite side of that is you file things you shouldn't be filing or take credits you shouldn't be taking, and then you get audited later down the line. And the IRS isn't exactly nice when they find out that you underpaid or you filed incorrectly. And so just briefly, can we touch on this idea of, because it's a voluntary tax system, right? The onus is on you to tell the federal government what you owe them, right? And then at the end of the year, you come up with whatever you come up with. You could be doing that on your own, right? Through things like TurboTax. And I would say it's still on your own through something like an H&R Block. There's just somebody doing the data entry for you, but it's still on your own, I say, because you have to hand them the documentation without any input to that documentation. Or you've got a CPA you work with. What if you're wrong?
So if you're wrong, there's a couple levels that might happen. So you might just get an automated letter from the IRS. Like we talked about, the IRS is going to match up. They're your fact checker.
Yep.
So they're going to match up all of the income that was on those W-2s and 1099s to what you put on your return. The software is pretty outdated at the IRS, but it is sophisticated enough that it will match up kind of gross income level numbers. And you'll get a computer generated letter that says, we've just adjusted your return. You put this much of wages, we calculated this much of wages. You put this much of interest income, we calculated this much of interest income. So you might, those are honestly the nicest and easiest ones to answer. You can write a letter back. You can look at it and say oh man, yep, I just forgot that form just didn't make it into TurboTax, right? Those ones are easier to resolve and pretty fast to answer. Most of the time, you can either just accept those changes or you can respond in writing and get it fixed that way. You're not in a full-blown audit.
Yep.
If that number gets big enough, the difference between what you put on the return versus what the IRS thinks on your return, your risk of audit continues to increase.
Okay. The red flag gets bigger.
Yes. And the IRS calls them diff points. So every little thing that's different, you get a little point. And pretty soon, if you think about your return going down a conveyor belt, one little thing wrong, two little things wrong, three little things wrong, four, and off to the audit track, right? You just kind of move your way.
Sounds like a song I learned in grade school.
Yes. And what I have seen, it's interesting, the audit track. I have been a part of a lot of audits, and when I worked at the bank, I managed their audit and controversy department. So I've done this for large scale corporations and down to the individual.
Wait, did you say it's called the audit and controversy department?
Yeah. Well, we file everywhere.
I love it.
Federal and state and local jurisdictions. So we got a lot of tax letters and audits.
And controversy.
Yes. But it's actually been really quiet the last couple of years with the pandemic. A lot of lag in those audits, mostly because IRS agents were sent home. So they weren't,
Sure.
A lot of audits are field audits where they actually they'll come to your business or they'll come to your work or they'll come to your house. And with the pandemic, they stayed home. So either you got these letters instead, because that was the way that they could kind of manage these audits, or they just didn't happen. So I do think that we're going to start to see more of an uptick in that as we move out of the pandemic, and with all of the IRS agents that were hired this last year.
I was going to say, that's what I was going to bring up, is there was all these headlines last year of all this, this new wave.
Well, I don't know when they're really going to be up to speed. At this point, you can still call the IRS and the phone systems will tell you that the wait times are so long that you need to just call again another day. They won't even let you wait on hold. So
they don't even give you like an estimated hold time?
No, they'll just say it's too long of a wait. Just try again later. Try again another day. And I have my own phone line that I can call as a CPA, and my phone line says the same thing. So I have
the bat signal numbers, Batman's.
So at some point, I'm like, this should change with 87,000 new agents. Some of them have to be working the phone lines, right?
I would hope.
We'd hope. So
that was the numbers, 87,000.
Mm-hmm.
Oh my gosh.
Yep.
So again, I agree with you. I don't want to discount what you're doing, but it is true. And I think it's this, if this analogy is terrible, you tell me, but like I tell people, like, you get to the end of the year, if you've done nothing from a planning perspective, you don't have a CPA you're working with, you're not being proactive about your taxes, you're making your decisions from January 1st to December 31st, you're doing whatever you do. And then February, you go to hand all the documentations of all the decisions that you made to your CPA, and you expect them to work some sort of magic. Like that's like going to the restaurant, ordering all of your food with your waiter or waitress. And then you get to the end of the meal and you're like, well, why is it $100? It's like, because that's what you ordered. The waiter or waitress is just doing what you told them to do and typing into the computer what you ordered. There's no magic button where they get to like discount your food for you after you've already made all your decisions. No coupons can be entered. You can't take advantage of any, specials that they had at that time because you already made all your decisions and you already ate all your food. It's over. Right. And that's what happens if you don't do planning, right? If you're transactional in your taxes, whether you're doing them on your own or you're working with the CPA, the result is you get to the end of the year. If you owe money, it's just a matter of you didn't pay enough. And if you get money back, it's just a matter of the fact that you just overpaid. Mm-hmm. And they're truing you up at the end of the year.
Right. I mean, unless you are, low enough income where you're getting something like an earned income tax credit where you're truly getting paid more than what you paid in. But I don't know that's not the majority of people that we're talking about.
Yeah.
So yes, I think that I am a huge proponent of planning. The clients that I work with, it's a big piece of what we push as part of the work that we do, because I think that our value is not in the compliance work itself. It's not in the putting numbers on forms, although that has to be done. It's in being really proactive and talking with our clients throughout the year about what's going on in their lives, what's going on with their jobs and their work and their plans, and talking with you and your team about what you guys are doing as part of your clients and our clients, our shared clients' financial plans. And I love the idea of planning for two reasons. I mean, one is hopefully we can come up with some strategies that help to, minimize tax or make that, put you in a really efficient tax strategy. But the other reason why I love planning is, if nothing else, it gives you some security and for what you're going to owe, or some time to plan for what you're going to owe. Like, I know with Fiat, you guys are really big about the evaluating for your clients what's in post-tax versus pre-tax retirement buckets. And if we're doing Roth conversions, that means you're going to owe this year, right? You do a Roth conversion, you're choosing to pay the tax now instead of deferring that tax. So planning, we're not doing planning to say like, how can we get that tax bill down? Because then I would just say like, don't do the Roth conversion, right? We're doing planning to say, with this Roth conversion, knowing that this is the best plan financially for you, here's the tax that you're going to owe. Here's how much you need to pay in estimates throughout the year. Here's what you need to set aside, or maybe what you need to have withheld from that Roth conversion as you're doing it. So some of that is just peace of mind and setting expectations.
Yeah.
I actually don't mind if my clients owe. I actually it like gives me heartburn for clients that owe that aren't expecting to owe. But if they owe and we were planning for it all along, then that's great. So no surprises in next season. That's what I like. And planning definitely helps to cut down on that surprise.
Well, and that's a great segue as we kind of think about closing this out, because that was my goal in this episode, is to try to gain a little or give a little bit of perspective to people of how to understand the tax code so that you're not surprised. Because the surprise means you just have a lack of information or a lack of knowledge, because the tax code is a code. It is a law. And even though you could do the best planning possible and still be a little off at the end of the year, because you don't know 100% all of the numbers that are going to come in all of the time. But if with proper planning, you're going to be darn close, right? And you can kind of figure this out throughout the year of how much you should be paying as you go, because the IRS now forces that, as we all know. And with a lot of the families we work with specifically, Carly, it's not, I always say, it's if you think taxes are confusing in your working years, wait till you retire, right? Because in your working years, your business is forced to pay and tell on you throughout the year, which means you're forced to pay throughout the year. And they're pretty accurate for the most part of what should be withheld, and so they're kind of helping you figure out what should be paid every paycheck so that when you get to the end of the year, you're somewhere around that break-even point. So unless you're lying on your exemptions or something to that effect, it should be, it should be close. Whereas when you retire, you don't have that. And so now the income coming in the door, you have to tell the IRS what to withhold, whether it's something as simple as Social Security, or it's something a lot more complex of, I have no guidance whatsoever. I'm pulling money out of my brokerage account or I'm pulling money out of my IRA and I just don't know. And so having that knowledge throughout the year so that you have proper expectations and that you make educated decisions on your money of understanding that whether I pull money out of a brokerage account or I pull money out of an IRA or I've got money coming in from a pension or Social Security, it's just important for people to understand that it's not all your money. Some of that belongs to the IRS, right? And it's not about how much, like if you owe them money, it's just about how much you owe them. And as long as the expectations are clear and everybody's on the same page, then to your point, it's just about getting to the end of the year and not being surprised.
Yeah. You've got a budget. It's set.
You may be unhappy with that budget, right? I don't know too many people that get their budget from the IRS and go, yeah, that sounds great. But at least you know.
Yes.
Yeah, you don't want to get there and have a $30,000 bill that you're just not expecting. And so a couple practical things. Practically, you're the average Joe retiree, and you're trying to figure, like, you've been W-2'd your entire life. And so this is kind of, for all intents and purposes, been taken care of for you. What's something that you should be aware of, a step you should take, an education you should seek out, whatever, for people that are trying to figure out how to more appropriately not just pay their tax bill, but plan for said tax bill?
Oh,
put you on the spot, by the way.
Yes.
These are not pre-prepared questions. No. I gave her no heads up.
I mean, I will say education piece, like come join one of your inner circle workshops.
Okay.
For sure.
I didn't pay her for that one either.
But man, there's so much tax content packed into that workshop.
Yeah.
And I think especially for someone that you just described, who's like pre-retiree, trying to figure out, what it's going to take to support themselves into retirement and how their income and investments will do that. I think that makes a whole lot of sense. But otherwise, talk to a CPA, talk to a tax preparer that's actually going to learn about you and your life and your family.
Yep.
I just had someone just this last year, a client of mine, I knew she had a baby. We had talked because she was like, life's really busy. I've got this new baby. Like we filed an extension, whatever. And then we went to do her extension. My tax manager got her return all done. They sent it to me to review. And I was like, where's her daughter? Like, where's her baby on her tax return? And my tax manager was like, what do you mean? And I was like, well, she had a baby last year. She was like, there is nothing. She didn't send me anything.
Really?
About the baby. And I went and looked through the file. Sure enough, no. If we hadn't talked throughout the year, if I hadn't known her personally to know, and I think about, like you said, the people going to H&R Block and sitting down with someone for an hour and whatever they brought in is what the person sends out. And there just would have been no way to know. So I love talking to my clients throughout the year. I love getting updates on their families and their lives and what's happening. But it actually helps as we're going to prepare those returns and do the compliance stuff. And it helps us to make sure that we're not missing anything and we're optimizing.
But Carly, if I go to H&R Block, it's $140. And if I have you do my tax return, it's more than $140. That's
true. Yeah, we pay for it. I don't know. Yeah. Yes. I had this conversation with my husband because I was saying, when I do someone's return, I can never get someone's return done in one sitting. Like I couldn't imagine sitting down with someone with their return, like an HR block, and getting it done in one second. I was like, I always have follow-up questions.
Yeah.
I never finish a return the first time that I sit down. And so I was like, how do people do it? Yeah. And I've talked to a couple people who work, and H&R Block's system is that they pay their people based on volume. So they're incentivized to get it done. And if they need to amend later because of the way that the people work there are paid.
Yeah. Now, I want to be very clear because I don't want to get sued by H&R Block, but it's fine. Like if you have 2 W-2s and you didn't move and you had no kids and you got nothing, like it's just literally 2 jobs and nothing changed, checking those boxes is going to be pretty simple. But for the majority of families that we work with and that listen to this podcast, and that's just not the case. Like stuff happens every single year. And when you're retired, your investments change every single year. A lot of people are moving, they're snowbirding, they're doing things like Roth conversions. There's just a lot of moving parts. They're turning Social Security on where they didn't have it before, or a pension where they didn't have it before. Their part-time job went away. There's just a lot of things that can change.
Or even like a lot of the clients that we work with as well that are small business owners or have rental properties or outside business investments, where there's whole other pieces of the tax code that come into play in terms of deductions and
possible
maximizing credits.
Yep.
Yes.
Yeah, the healthcare one is a big one for us, and planning around pre-65 retired families that are on their own for healthcare and have no idea that there's tax credits that are available should their income look the right way.
Yes.
I say it all the time, Carly, and I'm broken record, but it's for a lot of retirees, the amount of money that you spend every single year to fund your lifestyle and retirement has almost nothing to do with what your AGI or your adjusted gross income is going to look like. There's so many families I work with where, I just think of a family I was talking to about a month ago, and they told me exactly how much they spent last year. He knew because he puts all of the money on a credit card. And so they get to the end of the year, all he's got to do is look at the credit card statement. This is what it costs us to live, like lifestyle. That was a less than 6-figure number. It was less than 100 grand, including money that went to home renovations. It was still less than 6 figures.
Wow.
Their AGI was over 300 grand because of a brokerage account and some IRA stuff going on. There wasn't any money that they spent, but it was money that moved or money that traded or money that, and so it's just, it's a wonderful problem to have because it means that you did a bang up job of living below your means and saving money and all this sort of stuff. But it just leads to these tax consequences that I just don't think that the average retiree is prepared for. It's the same conversation you're talking about with businesses of I own my own business, but I don't, that's a whole separate section of the tax code that is opened up to you. And I always talk about like deductions and credits to me are Easter eggs.
Yeah.
Hidden all over the tax code.
Yes.
Right. And then you can go on the Easter egg hunt on your own, but you don't even know how many Easter eggs are out there. So can you imagine the infuriating Easter egg hunt where you're like, okay, go find the eggs, and you don't ever know when you're done because it didn't tell you at the beginning of the hunt that there's 50 eggs to be found or 10 eggs to be found. So for all you know, you found half of them or you found all of them and you're still looking. Whereas working with a professional, you know what you're looking for. You know what I mean? You know how many eggs are out there to be had, and you can siphon through and go, okay, there's 50 eggs to be had. You're eligible for 4 of the 50 eggs. I know that. And here's how we can take advantage of that. But in order to take advantage of it, you can't wait till February or March to come talk to me. We need to be making these decisions throughout the year so that when you come to talk to me in February, you have the correct eggs in your hand.
Amen.
There's no better way to end the podcast. Right there. Carly, I said at the beginning, I'm going to say it again. Number one, you've been a super important strategic partner for us here at Fiat. And so number one, I greatly appreciate that. Not only do you work with some of the families that we work with, but you're very generous with your time. It's noticed, it's seen, it's appreciated. And it just makes our lives at Fiat better, which in turn makes our families' lives better. And so one, thank you for that. Number two, you came during tax season. You've never been on a podcast. I gave you no direction whatsoever. And here you are. And I think this is after going through this with you, I think this is a super important podcast for people to understand because education is super important. And one of the first pieces of understanding from a tax perspective isn't getting how the code works. It's getting this concept of how you're supposed to interact with the IRS and their expectations of you and knowing the rules to the game. I always tell people that if you don't even know the rules to the game that you're playing, how are you supposed to play the game appropriately? And so learning some of these new facts about why the IRS does to us what they do. I mean, at the end of the day, it's because they don't trust us. but very interesting nonetheless. So thanks for sharing your knowledge with us and thanks for being with us today.
Yeah, I'm so glad to be here. Thank you.
Awesome. Well, thanks everybody for joining us for another episode of Every Day is Saturday. My name is Brad Gatto. I'm here with Carly Carlson and her firm is WE Team. Where can they find more information about you if they want to find you?
WeTeamCPAs.com.
WeTeamCPAs.com. I'm super biased, but she's a rock star at what she does. So look her up. So again, thank you for being here. If you want to know more information about us here at Fiat, it's also going to be on our website. It's fiatwm.com. If you've not yet subscribed to our podcast, we would love it if you do so. I'm going to say it like I always say it. My son that watches these YouTube videos, you can smash that like button down at the bottom. You can subscribe to this podcast. We would appreciate it. Share it with your friends. It's free. You can do that too. And you can find this podcast on any platform where podcasts are available. Thank you for joining us for another episode, and we will see all of you next Saturday.
Thank you for listening to Every Day is Saturday. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Fiat Wealth Management. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.